Hey guys, welcome to my channel. My name is Jay, and welcome to Jay Talks Finances. I have been wanting to start a YouTube channel for quite a while, and I love finances, so I decided to go ahead and combine the two. I'm not technically like a financial advisor. I don't have any formal training. I don't have any like college degree in finances. However, I have in real life obtained what a lot of people have tried to obtain, and I'm here to try to help people get to that same level. What I mean by that is I got out of the 9 to 5 and I've started working for myself now, which was a big dream of mine. I've been wanting to do it for a long time. So, quick backstory, I was in the Air Force for 4 years. I got out, I became a nurse. I was a nurse, an ER nurse for about 12 years. And about 8 years ago, I decided I really wanted to get out of the rat race. I started reading books like Rich Dad, Poor Dad, Your Life, Your Money, Millionaire Next Door, books like that. And I kind of got the idea that I could become someone that works for myself or get out of the what I call the rat race, for lack of a better term. And anyway, about 8 years ago, I started hardcore investing, and I was putting about 25% of my money, all of my income, my gross income, into investments. And last year, I was able to go full time into I was able to quit nursing. I went full time as a portrait photographer. I live down in Destin, Florida. So I do portraits, I do weddings, couples, engagements, families, stuff like that. I'll link my Instagram if you guys want to check that out too. The freedom to be able to do that was very important to me, and I was so excited when I was able to do that. And like I said, I've always wanted to start a YouTube channel, and maybe I can help people kind of get into the same boat I was able to get to. So hopefully you guys enjoy. I was going to show you guys real fast a couple of my pictures here. Not that this matters, but I always like when I watch YouTubers and I know a little bit about them. That's my dog there. His name's Pongo. That's him catching treats. So anyway, that's a couple of my pictures I do. I'll put the, I don't know how to do this yet, link somewhere. I don't know. So guys, I'm going to get back into the meat of this video, which is the finances. It'll be just maybe every once in a while I'll show you some pictures or whatever, but for the most part it's going to be finances. I know the hot topic right now is the stock market, and specifically the Fed. Jerome Powell, what's he going to do? Luckily they have these websites up here like cmegroup.com, and it shows us, if you look here, there's an 82% chance that they're going to go up by 75 basis points, which is 0.75%. And there's an 18% chance that they're going to go up by 100 basis points, which is 1 percentage point. I personally, I know a lot of people think if it goes up 100 basis points that the market will go super red. I think it might go red. However, I do think it'll be a quicker turnaround, and I do think, I wish he would, but I think I also expect a 75 basis points. The main reason I'd rather them just go 100 is last month's, August CPI was up 0.1%, which I know doesn't sound like a lot, but it's still going up. So I'd rather him just hit the hammer, do the 100 basis points, have the market go down a little bit. I think in the next month, 3 months, it'll start coming back up though faster than if we did the 75 basis points. Let me know what you guys think down in the comments. If you'd rather him do the 75 basis points, the 100 basis points, what do you think he's going to do? Anyway, I always want to review the stock market like when I do these videos. So we got the Dow Jones Industrial, which is the 30 biggest companies in the U.S. I don't know if they're the biggest, but they're definitely like 30 large companies. A little bit less volatile. Most of them give dividends, stuff like that. I don't specifically own, I do own a lot of index funds. I don't specifically own Dow Jones, but I do own something that's I would consider similar is VYM by Vanguard. That's a high dividend paying ETF. And between the VYM and SPLG, which is the S&P 500 index fund, that's probably about 85% of my money is in those index funds. I always max out a Roth IRA, and then I have a taxable account, and then I also have some old work like 401ks and 403bs. I almost forgot. So the Dow Jones went up 0.64 today. So we'll take that. The S&P 500, which if you guys don't know is basically the 500 biggest companies in the U.S. Basically, let's say Netflix were to drop out, whatever the next company would just jump in. So it's pretty much always the 500 biggest companies. The Dow Jones and the S&P 500 index funds also pay dividends. So those are that's like a little bonus. So let's say the S&P went up 9% in 1 year, but you also get like a 1% dividend that just adds on to your 9%. So next year we have the NASDAQ 100. This is used to be known as more of a tech stock heavy type of a play here. However, with like the weight of Apple and stuff, the NASDAQ and the S&P 500 are a little bit more similar than they used to be, just because of how big some of these companies are that are in both. But anyway, the NASDAQ, it is still a little more volatile than the S&P 500. So anyway, this is in order of what I think for the index funds the indexes, I should say. The least risky, which is the Dow Jones, the most risky, which would be the Russell 2000, which is the next one. Here's Russell 2000. You can see all of them were up just a little bit today. Not too crazy of a move or anything like that, but we'll see what happens when Jerome Powell or Jay Powell comes out with his numbers here on pretty soon here. So guys, these are some interesting plays here that I've been doing. I'd say less than 5% of my money is in the TQQQ, which is a bullish, which means you think the market's going to go up. It's a bullish, triple leveraged NASDAQ play. So QQQ is the NASDAQ basically. So I always just think of it as triple QQQ. There's also one called SQQQ, which is like to short that by triple. But I just see it like if you imagine like a slingshot or a rubber band getting pulled down, it's just pulling down, pulling down, pulling down. Eventually it's going to get let go and go up. I've been dollar cost averaging into this very slowly, but like every Monday I buy like 2 shares of this, 3 shares of it, just to be in on it a little bit. This is my risky play. I don't own any like speculative stocks or any like penny stocks or anything like that. So my speculative play is TQQQ and URTY. I do have to say I am not a financial advisor. I'm not telling anybody to do this. If someone were to ask me my actual advice for someone, actually I help run other people's accounts for them, and I only buy the S&P 500 index fund for them. That's all I do. I don't even do this stuff for other people because it's a little bit risky, but I'm willing to take a little bit of risk. So anyway, that's just know you're taking the risk if you do these. This one's URTY, which is the Russell 2000. And this is a triple leverage bullish move. So that means you think it's going to go up. So this one has been hit, the Russell's been hit pretty hard as well. And typically the small caps go up pretty quickly when the market does recover. Who knows when it's going to happen. But I'm definitely in this one for... let's see, it's 44. I think the 52-week average shows 136, or I'm sorry, the 52-week range, the high was 136.47, and it's down to 44.76. Even if that goes up to like, I'll probably sell if it gets to like 80, double my money here, 80, $90, whatever. I'll sell out, and then I'll just put it in regular like the Dow Jones or S&P 500 type stocks, or the Dow Jones or the S&P 500 index funds. Some other stocks I've been looking at. I've actually been buying Meta ever since it dropped under 155. I've been buying like 2 a week since then, so I probably have maybe like 20 shares of Meta, something like that. I pretty much buy everything on like once a week. If it dips, maybe I'll buy an extra share randomly on like a Thursday or something, but usually every Monday I just send money into my account, and then let's say I put $200 in every Monday into like my taxable account. I'll just buy whatever I think the best deal is that day, whatever is the most beat up. Meta has an amazing chance with the metaverse, as well as it has a good balance sheet. 361 was a 52-week high, and it's down to 148. Even if Meta goes up to like 200, then you make $50 off the stock there. So anyway, I don't personally own Apple myself, but it is a very important stock to keep track of, because it has such a big weight in the NASDAQ and the S&P 500. So if Apple goes under like 130 for some reason, I'll actually pick up some Apple shares as well. It's just such a very well-run company, very profitable company. It's not going anywhere. And then Amazon, I actually started buying in the June low. I honestly just kind of got lucky that it was the low. And I started buying Amazon at like 108, 109. I remember it kept dropping under 110. I'm like, man, I just had to keep buying them. Anyway, but jumped up to like 145, or let's say 142. And so I stopped buying then, but I probably have about 30, 40 shares of Amazon. And then we can't have a video without talking about Tesla. I mean, I bought Tesla right before it split. Maybe not right before, but I bought it before it split. And I've been, man, Tesla's just been hanging on there. Like, it's been doing very well, especially comparatively speaking to, let's see, year to date, it's down 22%. I mean, some of these other stocks are down, 60, 70, 80%. So for Tesla, only be down 22%. I'm not saying it's outperforming the market, because there's definitely other stocks that are outperforming the market and are actually positive this year. But to only be down 22% is pretty good, especially for a high growth stock. All right, so other things that are being important to watch for. I know this is a little bit of ways away, but October 13th, there'll be the next CPI release day. I think that will be a huge day. As you can see down here, the latest numbers, consumer price index for August was plus 0.1. I think that if October it comes down at like negative 0.1 or 0.5 or anything like that, it's going to be a huge rally. I do think there's going to be a Santa Claus rally. Let me know in the comments if you guys think CPI is coming down. I mean, around me, gas is going down. It's hard to say. Food does seem to be getting expensive, though, more expensive than it was. Like, I spent like $60 at Walmart today and like barely left with a bag full of stuff, and I'm pretty frugal. I invest 20 this year. I've invested like 50% of my income into the stock market, so like that shows you how frugal I am. So $60 at Walmart, like I didn't leave with anything. I had like some great value bread and I'm just kidding, but really not a whole lot of stuff came out there. This is kind of what I'm looking forward to, guys. I don't know if this is going to happen. We can only go off history sometimes. This average monthly stock market returns. September is the worst month on average in any year, and we're there now. The Fed, Jerome Powell, is going to go up 75 or 100 basis points coming up here soon. I think it's going to go red either way. I don't know if it matters. That's why I'd rather just do 100 and just get it over with. And then the next time they have their meeting, he can maybe go up like 50 or something. That would be really really good for the market. It'll be like a pivot, because instead of if it goes up 100, then it only has to go 50 instead of doing like 275s. I just think it would be seen better. I also think it would help inflation come down too a little bit faster. And I do think that housing is starting to come down. I live in Destin, Florida, which is like a real pretty fancy area, and even housing here is starting to come down. And we're probably a little bit more probably protected by some of the deflation of houses, but it's starting to come down here too. So let me know what you guys think. If you think October is going to boom up, you think it's going to be November, you think we're not going to boom up at all, it's going to be red the rest of the year. What kind of stocks are you guys playing? Are you playing growth stocks? Are you playing speculative stocks? Are you playing stuff like Palantir, SoFi, all those types of stocks? I personally don't do those things, especially with the recession. It's hard for me to buy stocks that aren't profitable when it's like this. Like $60 at Walmart barely got me anything. I'm not going to be spending money on companies. I'm not going to put my money in companies that aren't profitable. I don't have all this money like some of these YouTubers that are out there. They have like millions of dollars. I'm not saying they're not credible. I'm just saying they have a little bit more risk reward. I am like an average guy just trying to retire a little earlier than most people, and so me losing $10,000 is a big deal. Probably more so than some of these people that are telling people to invest in like SoFi and Palantir. In my opinion, I'm not saying not to invest in those things, because they might have a lot of upside, but just my money can't be going there. Maybe I'll miss out on a big gain, maybe I won't, I don't know. But with the recession, I'm a little more weary about putting my money in non-profitable companies. So anyway, let me know. I'm also curious what you guys do, if you have money in index funds, If you do only stock picking, if you do a mix like I do, like I said, I'm probably 85-15. My biggest position is actually PayPal for other stocks. So guys, I didn't mention this earlier, but I meant to. My personal biggest stock, individual stock, is actually PayPal. So like I said, I work for myself. I do portraits for people. Anyway, they pretty much always pay me with Venmo or PayPal. It's growing. Even my dad has Venmo now, and that's a big deal. So, I'm paying fees, the 2% fees or whatever for every single person that's paying me. And I know I'm not the only person that's doing this and getting Venmo, and I Venmo friends. Anyway, it's just a growing platform. Anytime I'm able to check out on whatever e-commerce site or whatever, I use PayPal. I love PayPal. All of my customers have PayPal or Venmo. Very few of them have Cash App, which is there's nothing wrong with Cash App, but just my own working experience. PayPal. I'll be happy if PayPal gets up to like 150. I'll probably start selling out and moving over to my high dividend account or my high dividend index fund, which is VYM. But I started buying PayPal at like 100. Then I was buying also when it was down to like 60. Was it 67? Yeah, I was buying when it was like under 70 for a while too. So I do think that PayPal will get back up to at least 150. So like I said, when that happens, I'll be starting to sell out of that stock, and I'll still keep some just in case it does get back up to 200, 250. But I'll probably sell half then. I have like probably almost close to $30,000 worth of PayPal. So once it gets up to 150, I get out. I think it's going to grow a little bit higher than like a Dow Jones or the VYM will, but then I'll just transfer it right over to that and put my money in a little safer area that will accumulate dividends. So anyway, that's too much talking for me. I hope you guys enjoyed the video. This is my very first video. Sorry if I rambled on. I do appreciate you guys watching. If any of you guys did watch to the end, please think about subscribing. You can be my very first subscriber to the channel. Like and comment, and I appreciate you guys.